Good afternoon, everyone. My name is Irakli Menabde. I am the Managing Director of the Georgian Co-Investment Fund in the Energy and Infrastructure team. I'll try to fit in 15 minutes a little bit of a description about our fund and give a case study of some of our investments and what our, let's say, thinking is about impact investment generally. So, I'm not going to spend more than 5 minutes explaining. We are a plain vanilla private equity fund focused on co-investments. So that means that individual shareholders and LPs are able to select which project they want to invest within our portfolio. The fund is structured and domiciled in Luxembourg. Most of the operations are dedicated to Republic of Georgia. For those of you that don't know where that is former Soviet Union, not the United States. We are a transition economy and we're about 4.5 million people. A little bit about some general covenants, let's say, of the fund. We have sector focus and we have geography focus. So that means that we have decided, and more like our LPs have decided, that this fund should have a dual mandate. One part of it is returns for our shareholders, and the other one is broader development of our country on a sustainable basis. And what that implies is, really we thought that 4 sectors will drive the development of a transition economy the size of Georgia, and that is energy and infrastructure, that is agriculture, that is manufacturing, and that is real estate. Typically, we look at ticket sizes of at least 5 million, and I will show you what just in energy and infrastructure projects go up to almost 2 billion in combined value. But you know, we're flexible, we know we're a small country, and we invest in everything that is interesting for our country within the borders as well as outside of it. One such transaction could be buying a construction company in Europe, trying to bring and bridge the skill set for, let's say, infrastructure demand that our country is witnessing right now. In terms of the returns, we are typically looking at anything above 17% IRR and ideally 1.5 times our money back. These are adequate numbers for a country in an emerging market. And obviously, it's a tough stretch to be considered, let's say, to want to have a social impact in line and balance it with the returns. But as I will show you in some projects, it's possible with a large sum of capital. This is our typical investment project evaluation and investment horizon. Our fund was basically 9 years in lifespan, and we launched in 2013 with a commitment of up to 6 billion. We're the largest emerging market private equity raise in 2013. And our idea is to really look at larger needed infrastructure investment projects first, and then as we start deploying capital to them and start the harvesting, we start moving down in the ticket sizes because the larger projects take a longer time. Now I will move a little bit about, let's say, where the sustainability of this lies. And I'm going to try to be very careful about definitions because to claim one is an impact fund is a stretch because no one yet still, even in this room, I think not everyone agrees on what impact investment definition is. We know it has something to do with returns and at the same time with sustainability and social component to it. So I'll try to be in line of what we're trying to achieve and what we think is possible and share with you some of the experiences and some of the lessons we have learned. So number one, we want to attract FDI because the GDP of a country like ours really does rely on FDI, and that means you have to create a structure, an architecture that is attractive to foreign investors to join your projects. That means that corporate language is English, everyone is educated almost overseas. We try to bring up young talent. Even on our organization level, I mean, my team is 50% gender equal, so gender bias is a very major issue. We try to educate and hire young analysts and associates rather than experienced hires to bring them up and to to develop and increase the benchmark of the skill set within the fund management organization. On the project company level, we're also very, let's say, focused on reporting in IFRS and trying to make sure that everything is coherent and easy to understand for foreign investors. So that's as much as supporting healthy business environment goes as well. Creating jobs. Creating jobs is an important component, and I will address that in the later slides as when I go into specific projects and how we review projects and according to what criteria we go with them. One example is we are very much focused on making sure that our project companies ensure at least 50 to 60% where possible for especially large construction and infrastructure projects use local labor. We are very focused on training programs. We're very focused on safety. We're very focused on developing even our sub-suppliers. And the background to this was really, let's say, the shared value concept coined by Michael Porter. This is more in line with what we're doing. We're trying to move away and kind of brush aside from just simply making a profit and making a social investment that is probably less sustainable in the long term and is not in touch with what we're doing on a day-to-day basis. We like to develop our subcontractors, our employees, and really want an investment to, let's say, have a long-term impact on the people working with us, outside of us, and around of us. So that's the building capital component. And of course, export base. We want to make sure that, particularly in agriculture, we are able to replace imports, which are often quite costly, of lower quality, and raise a lot of question marks about sustainability of the food industry as a whole, but that's a different presentation. A little bit about an example about a project. This is so we are 100% renewable, and this is our first project, Mtwari Hydropower Plant. It's approximately $120, $130 million project if you include interest, cost of interest. So this is a hydropower station that looks a little bit like this during the construction. So it is subcontracted in terms of the building works and construction works to Georgian contractors. We've hired international, let's say, owners, engineers, and surveyors to make sure that the local guys are able to move up a notch in terms of standard and make them also eligible to compete for other contracts and other projects that we're building. So that means health and safety, that means English language, that means basic technical skills, just on a human capital level. On the actual environmental impact of it, when we received the design for this project, it was including a reservoir, and hydropower station dams, although they are more environmentally friendly than coal station any day of the week, they still have some impact on the environment, and that usually comes from the reservoirs. So we got rid of, we reduced the reservoir, and we made this run-of-the-river project, and instead of affecting, let's say, the water flow and the streams, we actually dug a 10-kilometer canal in the middle of a mountain, and that's our TBM, tunnel boring machine, and essentially created a world-class project that was done in terms of environmental impact assessment on EBRD standards and so on. So the idea is that, one way of doing this would have been to do it cheaply, bring foreign contractors, we don't know them, give them under the key agreement, and say, deliver us whatever it is. Another way of doing it is, I think, the way we have done it. And that will kind of sink into what I'm trying to say in the last slide, where I explain in equity investment framework where I think private equity lies and where public equity lies, and really where measurement of impact can be done. This is another project that we're doing right now, Oni Cascade, exactly the same thing. We've gotten rid of the reservoir. We try to mitigate the environmental impact. We're digging tunnels, try to avoid any hydrological influence of our construction works. This is a $330 million project. And this is another project, Israeli, also hydro. also where we reduced it, and it's a $700 million project. And what I'm trying to say is, essentially, we're looking at wind, we're looking at solar, but it's also interesting to say that traditional, let's say, infrastructure projects can also be done in a consciously sustainable way. And this is what I think is an example of making an impact immediately, because each project employs approximately 500 to 1,000 people, depending on the size of the project over its lifespan. It builds a skill set for the local community, and it also contributes to the local budget in terms of property tax and income tax. And for one of our examples, a region where we built this power station, just the property tax quadruples the local budget in terms of the local municipality. So these are people for whom everything changes the minute the construction starts. Now, why we think, I'm not going to make the mistake of saying we are electrifying and giving electricity to 700,000 people. We're not. But what we think is we're trying to contribute to the general development of the economy, and in a commercial and sustainable way. In a couple of slides behind me, you see just our fund alone with its development will be contributing to approximately 25% of the national electricity generation. That's quite significant, especially in an emerging market country where electricity consumption and generation often is very correlated with GDP growth. I think if any industry is worth saying it about, build it and they will come, it's the electricity industry. Obviously, the risk is with the developer in terms of the power price if no one comes. But usually the problem is the reverse. People come, they want to open a factory, but there's not enough power. So this is where I wanted to conclude with this slide. Basically, I hope we can read the script. You know, I used to work by background in public equity markets. I used to work for Royal Dutch Shell. Then I was on their asset management side. I worked with their pension fund, and Benelux pension fund market is where I learned my first equity investments on a sustainable level, and it's very advanced, and it's a great place to learn on an institutional level of what is sustainable, what is not, how to think about it, and what are the mistakes to avoid. What I want to say was, I have worked with equity models, and I've worked with ESG and SRI factor screens, and I've tried to build portfolios where you know, we only downloaded a database of some appraisal where companies, which I think often were questionable in their nature, get a certain ranking according to some report that they filed. And we think it's a sustainable company, we think it's an impact investment company, but it's not, you know, and that's the reality. And this is why this concept of a slide is a funnel, in a sense that you start out on the outside here, where you have the biggest kind of opportunity set of liquid investments, where you screen out some things on a basic level. You say you don't want to invest in coal, you don't want to invest in something else, and then you know, the next level is, let's say, the thematic, when you start to bottom up. So you say, I like to look at factors where, you know, these guys have a specific gender ratio, they have, you know, they claim to be responsible in this way and that way. And these are factors that are quantifiable. The quality of the data, I think, is absolutely poor, but a lot of companies subscribe to them and they have no other choice. So external vendors, but internal reporting. So basically you build a portfolio on the basis of somebody else's due diligence, and you say you feel that, you know, we've invested in a green company portfolio. And then there is the third, let's say, funneling, where you say, okay, now I don't do this myself, I don't look at factors, I give money to funds. And there are a couple of funds that do claim that they're impact, SRI and what have you, and you know, you do the due diligence on the fund, and then you kind of hope and you assume that whatever private equity deal they're making, or whatever equity investment that they're making, the due diligence is consistent. But unfortunately, it's very difficult to measure this. And whatever you don't measure, you're probably underperforming on. And then I think this is where the private equity funds come in, and I think this is where, you know, you have the lowest likelihood of committing an error. And as I said, I'm not touching the social investment side. I'm touching about private, listed and private equity capital market here. And on a private equity fund side like ours, I think the devil is in the details. And I think, you know, whoever on an institutional level, and I think this has to be a lot coming from the institutional asset managers, pension funds demanding this scrutiny from their private equity funds, you know, you can only be really sure that someone is an impact investor when you actually read the contracts, when you actually see the statistics of the employment. And this is, has a long way to be standardized. But, you know, you have to really see that in a contract it says that, right, we're building a wind farm, but actually all of the local community rights have been violated. There's not a single local employee. All of the contract is overseas. There's brutal penalties on the government if there's something that goes wrong during construction, and so on and so on. And these things can very easily get swept under the carpet and come off as a green project. And the reality is very different. And I think, you know, the people that are in this room I'd actually like to draw a parallel of the very first kind of vegetarians in a food industry. You know, this is a movement now, and it's up to each individual investor and project manager to kind of think along the lines of what is sustainable and what is not, and then try to be as transparent with it as possible. And I think there was a speaker earlier about data analysis, and I think it's very important to kind of build a platform where some of the contracts actually of how these projects are manifested are uploaded so that people can actually measure them and eventually with time create a common criteria of what is impact, what is not acceptable, how these criteria are measured, how these contracts are enforced, and so on. Because once we have some sort of a exogenous third party that is able to lay out this criteria on basis of shared experiences, like for instance what we're doing, and I think someone else I'm sure could do it better with time and what have you, we'll be able to build a data set and a database really of rules of the game. And I think it's great that everyone is here. It's a pleasure to address you guys, and I hope that some of what we're doing in Georgia can be relevant on a global scale in renewables and outside. Thank you very much.